We're lucky to have Federated Hermes CIO, Stephen Auth with us. Stephen, I want you to come in here because this was your note at the, I think, beginning of this week. You talked about approaching humility at the highs. And it was really interesting to me because you say regular readers of your work know that you don't like to take profits in a secular bull market. But that, listen, you've made some pretty big gains, 47% large caps, 23% in international. So you felt it was time to take some of those chips off the table. Why humility, though? Why did you use that word?
Well, Charles, in this business, I'm writing a book called 40 Years, 40 Lessons. I've got 80 lessons in it is the problem. But one that keeps recurring is humility at the highs. Whenever you make a good call, everyone starts congratulating you. You start to believe your own press. And that's the time when you're most at risk of overstepping. And we made a pretty good call last fall when we put money into the large cap growth stocks. It had a huge run. All my guys are congratulating themselves. And I think there's a lot of investors out there who've done the same thing.
Right,
They're all excited about NVIDIA. It never goes down, blah, blah, blah. And it's usually at points like that that you got to sort of step back and have a little bit of humility and maybe take something off the table.
But I got to tell you, there are people on Wall Street that have been wrong for 10 years and need a little bit of humility. They come on all the time. There's going to be a crash. I guarantee it. I know I'm great. In the meantime, if you listen to them, you've lost money. So you're right. It does put a lot of pressure on. I hope you don't mind. I'm sharing an email that you and I had. July 10th, you sent me your note. I'm like, okay, so what works from here, right? If you're taking some off the table and you're still relatively bullish, I think small caps and financials rip. You use the word rip higher. They're ripping higher. I think the Russell now up about almost 9% in the last few sessions. You called it, but how long is it sustainable?
At least to the end of the year, Charles. These things have so underperformed the rest of the market. Their multiples are cheap, and the fundamentals get a lot better for them in the back half of the year. Their earnings gap against, say, the NVIDIAs of the world or even the large cap growth index goes from double digit to almost flat in the back half of the year. So you've got good fundamentals. You've got multiple valuation gaps of 10 points or more, 8 in the case of small caps. And then you've got the thrust of this election shifting in Trump's direction, which is probably very favorable
now,
for small cap stocks.
Speaking of which, though, you said from here on the election will matter, but you said this on May 21st, right?
Yeah.
All of a sudden, the election is like big market-driving news, particularly after the debate, more so after the assassination attempt. Just how much will this? I mean, does it carry the market, influence the market up into Election Day, or even beyond?
Could be beyond. I mean, if you look at the policy agenda of the second Trump administration, if that's what we're facing, it's going to be supply-side driven reform, so lower inflation. That means lower interest rates. It's going to be deregulation in a big way. That's immediately going to help the smaller cap companies that are disadvantaged by the cost of regulation versus the large caps. And it's certainly going to mean lower taxes, because taxes are going up next year unless a Republican sweep, which rolls those tax cuts forward. So it's one of these elections.
What do you make, though, because I don't want to run out of time without getting your thoughts on this, that a lot of traditional Republicans, particularly Wall Street, hey, nothing matters more than corporate bottom lines. A little worried about the populism here, the J.D. Vance selection here, the tariffs, and some of the other things that are not traditionally Republican orthodoxy, but seem to resonate a lot with people, and particularly in the heart of the land, that have lost their way, lost their jobs, dealing with meth addictions, falling birth rates, overdose deaths. They're dealing with real world stuff, while Wall Street has always seemed to be micro-focused on the bottom line of corporate America. Yeah,
well, the bottom line is going to be better under a set of Trump policies. On the populism thing, Charles, you've been first on this. Let's cut with the labels. Let's talk about policies. And the policies here, I think, look pretty good for corporate America.
All right. And by the way, I know that you've made this rotation, but you still have a target of the S&P 6,000.
Absolutely.
Is that going to be? It's going to be harder, though, without leadership from those growth sectors.
You don't need it. I mean, if you've got 70% of the stocks going up 10%, it gets you to 6,000, and we think they're going up more than that. I'm hoping that the leaders don't fall back too much.
I got you. Humility. Word of the day.
All right, Charles. God bless.
Always love having you on. Thanks a lot, Steve.
Right, thank you.